For a check on the markets, let's bring in Samana, the senior global market strategist at Wells Fargo Investment Institute. And Samir, you think that we've seen all the gains we're going to get this year. Why is that?
We do, Becky, just because, I mean, if you look at this trade deal, it's probably a political win for both sides, which were, in need of such a win. Unfortunately, it just doesn't mean a whole lot for S&P earnings, probably doesn't mean a lot for economic data, at least not over the coming months. So from our standpoint, you've got good gains in calendar year 2019, even though if you stretch back to Q4 of last year, they're not spectacular.
That was going to be my point. We've basically gone nowhere in a year.
Absolutely. Well, unfortunately, earnings haven't gone anywhere in a year, and that's really why we're so cautious, is because even now, even with this deal in place, it probably doesn't do a whole lot for earnings because you're leaving a lot of the existing tariffs in place, and you still don't have any of the certainty that businesses need, like Steve mentioned.
What I will say is we were expecting another round of tariffs or heightened tariffs to go in on October 15th, tomorrow. That's been taken off the table. Maybe that gives companies a little more certainty?
It's possible, but the tricky part is a lot of these came about just a few months ago when President Trump kind of escalated the trade issue with the new round of tariffs. So the tricky part is it's kind of addition by subtraction, where you announce all these tariffs and then you kind of delay or push them off. And I'm not sure that does a whole lot for markets because, again, if you're not going to stick to newly announced tariffs, that's just one more thing where, do I order an inventory now? Do I wait 3 months? Do I wait 6 months? Is there going to be a grand deal? Is there going to be, a re-escalation? The problem is the uncertainty. It's not so much the tariffs themselves. It's how quickly these things move around.
Although that uncertainty has really kind of been baked into the market at this point, no? We're looking for an earnings decline of 4.1% if you believe the consensus estimates. Earnings may very well come in better than that when we start getting them this week.
Well, the tricky part is the earnings for this year probably reflect that, but if you kind of step out to next year, there's still some pretty healthy growth rates, especially if you look at for small companies, the Russell 2000. Analysts are still expecting north of 30% earnings growth for small U.S. companies. That's going to be hard to hit if you have a lot of these tariffs still in place and the economic data continues to be as sluggish as it has.
So
that maybe has some room for catch-up in the off chance that there is a rotation. The tricky part for financials has been the curve just continues to flatten. It continues to remain inverted in certain parts of it. So again, they probably don't do a whole lot until you get the curve to re-steepen, which unfortunately probably isn't until growth takes another leg down. But there probably isn't a lot of downside in financials either. So I think with financials, a lot of people want to be early as opposed to being late.